All right, I hope you can hear me fine. I'm happy to be the coordinator and the chair of that panel, so thank you for being here. I'm Philipp Hartmannsgruber, I work at the DSGV, that's the German savings banks organization. And yeah, I'm happy to have great people here in the panel, and I would like to give you short time to introduce yourself. Maybe you first, Professor Bofinger.
Yes, hello, my name is Peter Bofinger. I'm a professor for economics and monetary economics at Würzburg University.
Hello, I'm Jürgen Schaaf. I'm advisor to the senior management of DG Market, Infrastructure and Payment at the European Central Bank, and I'm currently working at the Digital Euro project where we are in the investigation phase.
Yeah, so then it's me, Jan Rosam. I'm a partner at EY here in Frankfurt, and I'm leading our digital asset and digital currency consulting practice.
Hello, can you hear me?
Yes.
Hello, welcome. Thank you for having me. My name is Agata Freida. I'm Chief Legal Officer for Web 3.0 company Stages IM, and I also have an academic hat, which is Assistant Professor at the Warsaw University of Technology and a visiting professor at a number of other European academic institutions. Thank you for having me here today.
Great, thank you. So the first question, maybe directly to you, Mr. Schaaf. We already have digital money, right? Sure, we have cash, but most of us are paying all of the time with the e-money or with PayPal, with the money on the bank account. And so why do we need a digital euro?
That's a very valid and important question, and it's currently one of the biggest challenges that we face to make the difference and to explain why there is a need. Let me first say, at the moment, there is indeed no effective need for the introduction, but we have to be prepared for a couple of scenarios that are foreseeable, that are more or less likely. And before I mention the difference, maybe I just dwell a bit on the three major scenarios. There are two negative ones and one positive. So the negative one, number one, is the phasing out of the demand for cash. We are observing that more and more payments are made cashless. So the demand for cash is withdrawn. In various countries of the euro area, you can observe this to a different degree, but even more so when you go to the Nordic countries of Scandinavia, where, for example, in Sweden and Norway, roughly 4% of the transactions are made in cash. So we are expecting this trend to continue. And important point here, it's not on the push by the central banks that there's a withdrawal of the demand for paying with cash. It's merchants, it's people. So we promise to continue to further issue cash, but we cannot exclude that the demand for cash is going further down. So that's negative scenario number one. The second one is a political one. And that's actually the most important one. We are observing, or we have observed, in the digitalization of monies, payments, that there are big players already out there who intended, and still do, to issue currencies, private currencies, stable coins with certain features, then crypto assets, cryptocurrencies, and the like. Some of which would have the potential to threaten the monetary stability of a currency area. So depending on the size, the unit of account function could be affected and the functioning of monetary policy overall. So that are really gloomy scenarios. However, you have to be prepared to come up with something. So the risk of, let's say, closed loops, closed clubs. If you imagine really big tech companies issuing their tokens in an order of magnitude comparable to the currencies of other states, being in parallel, at the beginning maybe attached or hedged to a real currency, but then getting more and more powerful, you might affect the unit of account function of money. So there's a monetary policy, monetary integrity motive behind there. And that's probably the most important motivation, this need to offer a public service, political case. Last but not least, there is the positive impact that if there is the issuance of central bank money, which is different from the payment systems we might be talking about, if you have the issuance of central bank money in digital form to everybody, that also offers the scope for innovative new products from the private sector and might give a push to the further digitalization of the European economy.
Okay, thank you. So there were always a monopoly of money, and now with new forms of money, cryptocurrencies, and there's not a monopoly anymore. So that is kind of one of the reasons why the ECB is maybe launching the digital euro. Professor Bofinger, do you see the need for the digital euro?
No. So it was already said there is no effective need for the digital euro right now. And the question is how realistic and how dangerous are the scenarios that were just presented. So phasing out of the demand for cash, I don't see it. So if you look at cash currency in relation to GDP for the major reserve currencies, dollar, euro, it's just the opposite. The amount of currency relative to GDP is increasing overall. And I think Sweden is a special case, that's true. But for the major reserve currencies, I don't see that there is a trend that we have a phasing out for cash. Of course, it might be the case that in our daily payments, cash will no longer be used, and that it might become more difficult for people to access cash. But then I would say the solution is not to have a digital euro, but to make sure, as the central banks, that people always have the access to cash. So to make sure there is a network of ATM machines, and maybe it must be even subsidized if the private sector is no longer saying to offer it. But in order to keep the access to central bank money open at all times, you don't need a digital euro. Then you need really a network of ATMs, and that might be a task of central bank to provide that. Then second argument, we have these big players who might endanger central banks. So what I think is important, private currencies as a unit of account or as a means of payment did not succeed. And you could see it. So the central banks were really frightened when Facebook said, okay, we will have Libra. And people said, oh, wow, now this will dominate the market. But it crashed. The Libra idea is dead. Why? Because they had the idea that they need to create a private currency. But that's not something that people want to. So then this, as a second approach, Libra said, okay, let's have a dollar Libra, a euro Libra. But the idea to have a private currency was just nonsense, and it failed. It's different with the cryptos, but I think they are more interesting as a store of value, but not as a means of payment. And if you talk to the stable coins, they're all, we heard it this morning, they're all attached to the dollar. No? So stable coins are not new currencies, but in my view, stable coins are some kind of shadow banks. They do the same thing as banks. They take deposits, they say, yes, we guarantee that this deposit will have a stable value vis-a-vis $1, and it's a kind of unregulated bank. And what I think what's needed with stable coins, you just need to regulate them as ordinary banks. But it's not the business model of the stable coins, it's just the business model of a bank. And therefore it needs to be regulated, and so it does not need response by central bank, it needs a response by the regulators. And then the idea that if a central bank, the CBDC, there might be new products and it might become programmable. Maybe I'm not smart enough, but this case for CBDC as something which you can use for programmable money, it doesn't convince me at all, because we have it We have machine-to-machine payments. If you look at the toll system in Germany, yeah, so you have these trucks driving through the country, and they have their onboard system. It's monitored by satellite, and all the payments are made automatic. So the driver must not get out of the car and pay something at a toll booth, but it's all automatic, programmable. And so I don't see any need for CBDC to make it programmable. Also, if you have small amounts, then you just make it once a month. Then all the small amounts are added, like our telephone bills. We have all small amounts, and so I'm not convinced.
Okay. Agatha, Jan, do you want to add something to that?
Yeah, it's of course interesting to sit on a panel where both sides really are presented here as well. So maybe just from my perspective, also giving a little bit the feedback we get for specifically financial service institutions. Of course, the banks are really skeptical. I mean, there are a lot of discussions around what will be the role of the digital euro, specifically what will be the role of the central bank in the banking system. And I think we also saw on the previous panel, we talk a lot about policies and central bank interest, but of course, at the end of the day, the cash is for the European society, for all of us. So, I mean, the question really is like, if I'm a 20-year-old person paying with my iPhone, so what will be the difference between what I have today, as I call it, as a digital money, and what will be the digital euro? So, and I think that's something which, of course, I mean, Jürgen Schaff has already said, is very important to work on this, to define the digital euro and also to make clear what the advantage will be from an end-user perspective using the CBDC and not just from a policymaker perspective. So therefore, I'm happy to see that the European Commission came out with a consultation, because I think they have the right tools and forum to make happen that the European public can raise their voice and get heard.
Thank you. Agatha?
Thank you. Maybe I just would like to add for myself that really what we are living through right now is, and we really have to all understand it, that what we are living through is a technological revolution, because we've lived through and we have witnessed a few innovation waves. But the one that is currently taking place is unlike any other that we have seen in our lifetimes. Because what's happening right now is there's this new emerging technologies which they brought an idea of the seamless and unified transactional space, where virtually infinite amount and variety of economic claims can be traded in this very universally recognized digital form, which are crypto tokens. So it literally renders the current approach to everything from policy to regulation kind of out of sync. And it's not a matter of degree, it is a matter of principle. So what is happening right now is the foundations are being laid out for new infrastructure, new infrastructural architecture on which new digital economy will be built. And this, obviously, I agree with my with panelists before me, where the professor was talking about how well everything works and the payment system works. Yes, we have optimized very well the technologies and the systems that are currently in place. But what we need to look at is the basic foundations of how these payment systems are built. Because what's happening right now, we are not optimizing what we currently have. It's new infrastructure, new technology is being built, completely new principles, new set of values, new foundations. So other innovations have to accompany that. And we have to ensure that we have a payment system and a monetary unit that is in sync with this new digital technology that is being built on, based on DOT technology, for example. So obviously the scenarios for digital euro that were presented here were presented in a sort of more gloomy fashion, like lack of cash being decreased, and perhaps other technological companies building their monopolies around new forms of money. But what is really important is to understand that we have to support the emerging technology with the adequate payment solutions and the adequate forms of money to accompany new business models, to accompany Internet of Things, to accompany tokenization of economy. So I strongly believe we do need digital euro, and we will probably need more new forms of money than just the CBDC issued by the European Central Bank.
Thank you. Yeah, you want to add something there?
By all means.
Okay.
Just some facts to Peter Bofinger. We are not that far away in many points, although we come to different conclusions. One or two facts. The demand for cash, indeed, is still increasing in Europe, and it's increasing faster than our GDP growth. But it's not used for making payments. So it goes somewhere, probably hoarding. It also leaves the euro area, but it's not made for payments. Cash is going down in terms of payments, and that's what our project is about. So retail payments purpose. Now, to subsidize ATMs when the banks don't want to handle cash, don't want to give it to the citizens, the citizens prefer to pay digitally, and the merchants don't want to have cash because it's costly. It's a problematic scenario. And it's not only Scandinavia. If you go to the Netherlands, for example, although cash, banknotes is legal tender, you have, based on private law, the opportunity as a shop to say, if you enter my shop, you have to pay with a credit card or whatever solution, like the petrol stations here do. You are not allowed to pay with a €100 banknote. So private law prevents the effective widespread use of illegal tender currency. So there's something going on, and to correct that now, backward looking and provide cash, although we could also offer something digital, it's problematic at least, but it's not excluded. Last point on stable coins, absolutely. They are operating like shadow banks or money market funds, whatever you want to call them, and they are not regulated. That's a big mistake from the past, and it's now being repaired, and that is good. And maybe very briefly, if I may, how these things work. So you have a company that issues these tokens, the stable coins. They have then on their liability side of their balance sheet these tokens. You give them the money, you give them dollar or euro. Then you have on the liability side those tokens, liabilities without interest payments. So a liability for free, wonderful. What do you do with that money that you get? You invest it somewhere. As a business case, the riskier you invest it, the higher yield you get, the more attractive the business case is. So there's an inbuilt incentive that stablecoins invest into higher yielding, naturally more risky assets. So, and if some say we only invest into cash or cash-like assets, it would be good to have an audit and to regulate and to monitor this. Otherwise, the inbuilt risk of being into illiquid and too risky asset is too high, and that's actually what history tells us whenever there was a prevalence of private monies, liquidity crisis and financial stability risks. So I fully agree there needs to be more regulation, and there then we disagree. We think that when the regulators are being a bit too strict, we at least should offer an alternative.
It was said digital euro is new. That's true, but there are other CBDCs. We see in China, for example, the digital yuan is tested with hundreds of millions of people. And the digital euro, it's not that clear when it will be launched. Maybe in 2026, possibly. Yeah. And one issue is privacy. In China, it's a topic, and in Germany and Europe, it's a topic too. So what do you think about the digital euro regarding privacy and maybe compare it to other CBDCs like the digital one? Whoever wants to go first.
Yeah, I think the main problem of a CBDC is that it can never be a perfect substitute for cash, because cash has this privacy advantage. And I think that's why it's also used in such a large degree, because it's all the shadow economy, and that's why the demand for cash is so high. And in this regard, a CBDC can never be a substitute. So I always say CBDC is, the digital euro is not really a digital euro because all euros are digital. From the very beginning, the euro started digital, became physical later. So I think it's a misnomer, first of all. So in my view, the digital euro is something like digital cash. And digital cash is sometimes a contradiction in itself. I always compare it to alcohol-free wine, because what makes wine attractive is the alcohol, and what makes cash attractive is that it's not digital. And so I think that's a contradiction in itself, that there will never be a demand for the digital euro for those people who use for certain reasons cash. I think that's a major problem. But I think when you say, okay, we see that cash is no longer used in regular payments, then what is the answer to this? I think then you need another payment system. So we talk so much about the digital euro and CBDC as kinds of objects. But what we have to talk about, and it was just mentioned, we have to talk about payment systems. What are the payment systems that matter? And what I see is that we have a dominance of payment systems like PayPal, and I think that's something the central banks should address, because if you just issue a digital euro with a maximum limit of 3,000 euros, it will be digested by PayPal. But PayPal, it doesn't matter. They say, okay, let's also make a CBDC account, we use it, but it does not change the dominance of PayPal. I think what really matters for Europe and for Europe's sovereignty is to have an independent payment system. And we've seen it with all these sanctions. Maybe you get a crazy US president and he sanctions Europe, and PayPal and MasterCard and Google are no longer available for us. And therefore, I think what we really need to push is payment systems, and that's much more important than what objects you have in this payment system. Here you could look at the example of Brazil. The Brazil Central Bank has developed the PIX payment system. It's orchestrated by the central bank. It is extremely successful. There's just a report in the BIS report, and I would suggest for the ECB just to look what they've done in Brazil. It works.
I think that's a good hint. We have just 1 more minute to go, so if someone wants to add something, please, briefly.
No, I think, again, on the privacy, I mean, as we have seen in the previous consultation from the ECB on the digital euro, there is a different views from different countries, from citizens from different countries in the euro area. So I think we should leave it to the public to make a decision if this is something, if this is a feature which is really required. So again, therefore, I think it's good that the European Commission steps in to make this, the citizens heard in this kind of design.
Really quickly, probably about PIX.
Yeah, so just about PIX, looks good, yes, PIX looks good. We have something similar already. It's TIPS, so the infrastructure with which you can make your private payments, and it's settled then, after all, in real time with central bank money via TIPS. We have that. But the big difference to Brazil is that Brazil authorities force the biggest banks and payment service providers to apply this. We are in Europe, and we are a bit shy of forcing private companies and banks to do what is to the benefit of at least what would be perceived as to the benefit of us. So we have private solutions, we have a fragmented payment landscape in Europe. So you may like your German, your French card solution, but it doesn't work in the other countries. And that's a major difference. So one of the key features of a digital euro will be it will have pan-European reach. And that's a very important feature.
Thank you. I work for a big bank, so forcing us to do something isn't that well seen at banks, I would say. But yeah, great panel. Thank you for your time. Thank you for your what we discussed about. I think we could talk for like half an hour more, but unfortunately not possible. So thank you everyone, and see you next time.